So if somebody brought me or you an opportunity to invest in one of these things, right? And they were that sponsor was the operator. What are the things that you would have them look at about the operator, about the facility, about the business plan that you've noticed in your business that would be massive red flags for whether this is going to be successful?
That's a great question. Yeah. I think the first question I would ask, and again, it depends on this. If it's a small residential home, they're going to know a lot of these answers because they only have like 5 residents and they're probably doing 5 of the jobs themselves. They're the operator. They're probably handling, managing the home, everything like that. So they know a lot more about it. But if we're talking about like a typical senior living community, first and foremost, do they understand who moves into their community and who's the one making the decision of who gets to move in? Because a lot of times communities get it wrong. They're marketing directly to the seniors, but it's actually the adult children who are making the decisions or who are influencing the decision. So even for independent living, even for assisted living, where that older adults still, they're not in cognitive decline. They certainly can make decisions for themselves. Their children are still weighing in. Making sure that, that this community understands that first and foremost, that's who they're talking to. Would be like, do they have a repeatable path to stabilization? When a community is acquired or built, the first thing they want to do is lease up or, make sure that their occupancy is sound, getting to that 80-85% mark at minimum. What's their plan for doing that? And then once they get there, how do they plan to maintain that? Do they have other buildings in their portfolio that they've done that with already? I would probably want to look at like comparable assets and see if they have something else. And then in terms of like conversions, right? Like how long is it taking them from the time somebody inquires and says, I'm interested, to the time they actually move in? Believe it or not, like some of these places, it's like 180 days, which is crazy. And the only way that's possible is if they're not executing. There's something in the process, whether it's marketing, sales, or operations, that's not working the way that it should. And so it's taking far longer than it should. And obviously, nobody's going to stick around and wait for you to get your act together for 6 months. So they're just leaving a lot of money on the table when they do that.
Welcome to Brick by Brick. Join me, Loren Wernette, as I share my personal journey of building a thriving real estate and hard money lending business from the ground up. Along the way, we'll explore the strategies, challenges, and breakthroughs that come with growing wealth. Whether you're a seasoned investor or aspiring entrepreneur or simply curious about the world of private lending and real estate, this podcast is packed with actionable insights, real-world stories, and mindset tips to help you build your own path to success brick by brick. Welcome to another episode of Brick by Brick. Today, my guest has spent 30 years in sales, marketing, operations. Today, he's the founder and CEO of CCR Growth, demand generation firm built exclusively for senior living providers. He helps communities go from distressed occupancy levels to full in under a year. He's also the host of the podcast Leads to Leases, the #1 senior living marketing podcast on Apple Podcasts. And in 2005, he launched Growthly, a performance-based model built specifically for boutique senior living operators. Welcome to Brick by Brick, Jerry Vinci.
Thanks so much for having me.
Yeah, I'm excited to talk to you. So we talked a little bit before the show, and I have honestly been in the real estate space for quite a while. And I hear people talking about the senior living space. And I think a lot of people I know and I talk to kind of know that, the baby boomers, the oldest of those are starting to get to 80 years old. There's a whole slew of them coming after there. You see some senior living homes kind of around, but I'm not sure that anyone understands the opportunity that's coming with that amount of people moving. And from an investing side of things, like the money that's potentially there, the occupancy levels that you can have in a senior living facility, or, we think of them all as these big, huge facilities, but there's also these, what you call boutique of 10 to 50 beds, and how you can get on there. So I'm really excited to kind of hear all about that. But before we get in that, tell us a little bit about how you got into this space.
Yeah, that goes all the way back actually to my teenage years. All 4 of my grandparents went through some type of senior care, whether it was in-home care. My one grandmother had dementia, so she ended up in a skilled nursing facility. My other grandfather, he just needed some assistance with like activities of daily living, so he ended up in like an assisted living place. So I kind of saw all the different types of communities there were out there. And I also saw the good and the bad. My grandma being in the skilled nursing was not a good experience for her, not a good experience for our family. So I got to see that side of it. I also got to see like how families kind of struggle to make those decisions of in terms of like placement for a loved one. It's really a stressful time. So I kind of put that on the shelf. Didn't really think about it again until I started my marketing journey. I was after college. I was an art director for corporate communications company. I hated it. I think I was there for like 6 months, and then I'm like, I'm out. I can't do this. Started my own agency in 2004, and kind of quickly knew I wanted to niche down and I wanted to do something more meaningful and passionate with my work. I didn't just want to like help businesses sell more widgets, right? And so trying to find something that was along that humanity route, I kind of fell back into senior living and really thought that would be a great niche to be in, just because it's human centered. It's also somewhat recession proof because they're not going anywhere. It's not going to get replaced by AI. There's all reasons why being on this side of the fence, it makes sense to focus in on a business like this or an industry like this. But then, as time went on, we acquired a couple of senior living clients and we just ended up falling in love with this space. And then, we're like, this is all we want to do. So we've built our entire team around senior living. Started off as like a marketing agency. Now we're doing demand generation, which is a little different. It's more about kind of building trust up front, building trust, credibility, authority, all of those types of things up front. So your customers are kind of like already informed and already interested. Like as soon as they find you, they're literally raising their hand and saying, "Tell me more," versus marketing or advertising, which is, kind of like just throwing up a sign and saying, "Hey, we're over here. Are you interested in what we're selling?" It's a very different approach, which lends itself well to senior living. So that's kind of how I got my start. And we niched down officially, I think like 4 years ago, exclusive into the senior living market. So now this is all we do.
Got it. Can you set the stage a little bit? So when you say senior living, I think a lot of people have the like grandma from Happy Gilmore type facility in their head, right? And I have a slightly more knowledge. So my wife was a nurse, or RN, and she worked in geriatrics. And so she worked at a facility where they came in fairly self-sufficient, just had a little bit of help, and then kind of migrated through the facility all the way towards the end. So just maybe give a definition of what senior living is and the different phases or the different pieces of it that someone might be.
Yeah, I mean, you could say senior living, you could say senior care. It really just depends on your scope, I guess. If we're saying senior living, we're talking about building a community of some kind where older adults will go to live, typically 65 and above. But in reality, that's not really the case. The majority of residents in most communities are 85 and above. So when we say we're targeting the 65 plus demographic, that's really early in the process, and most people are not ready to make any major life changes at that point. In terms of like levels of care, there's everything from like independent living, which is like, I'm 46 right now. In 20 years, maybe I want to downsize, right? And I just want to simplify my life. I don't want to have to cook, clean, take out the garbage, any of that stuff, do my laundry anymore. Maybe I just want to live somewhere that has all those. So independent living typically is like an all-inclusive option where younger, older adults can go just to kind of like simplify and be among peers. I think that's an important thing too, because this loneliness epidemic is pretty huge, especially among the older population. Then you go to like the next phase from that is assisted living, which is basically like independent, but you just need some help, maybe getting dressed, maybe with meal preparation or some other activity of daily living. That's where kind of assisted living would come in. From there, you get into the more high acuity spaces like memory care, dementia, Alzheimer's, and then you also get into like skilled nursing, or maybe somebody's got like a complex, multiple situation where they've got dementia, but they've also got some other chronic illness or issue that has to be dealt with. So those are kind of like the major 4 kind of levels of senior living. But then you also have in-home care, which can range from like, non-medical assistance where somebody's just coming to the house to help out taking care of the home, all the way to like someone who's coming in to like administer medication, or maybe somebody has dementia and they're still at home, and they need somebody there 24/7. It's kind of roundabout way of explaining this industry.
Got it. And so for your business, are you focused primarily on the location-based assisted living versus like the traveling nurse and that type of?
Yeah, we've worked with both in-home care as well as senior living communities, but For us, profitability wise, it's not as lucrative to work with in-home care just because there's so much turnover. They're getting paid on an hourly basis versus, senior living where it's like a monthly rent. And the longevity of senior living on average is about 2 years. So if you bring one person into that community, and they're paying, let's just say for $7,500 a month, for 2 years, that's a pretty decent amount of revenue that they're generating from that one move-in. Their budgets are bigger, and then they're willing to put more behind it because they know that those residents are going to be there long.
Yeah, I would assume, not to be insensitive, but I would assume the churn of a customer isn't very high either. You're not moving from one facility to another.
Not usually. I think the satisfaction rate is in the high 80s or low 90s for people who've been like surveyed and asked, what's their experience like since moving into a community. Most people are pretty happy with it. There's, just like car shopping today, I mean, there's so many options out there that usually if you're not in an exigent circumstance where you have to find something like right now, you can window shop, you can take your time, do the tours, go eat some meals there, talk to the residents. You can definitely do your due diligence far in advance so that it's not like such a daunting shift.
Got it. And so from a operation standpoint, like what kind of occupancy do you see with the assisted living and the senior care facilities? And do you have an idea on where margins sit? I mean, obviously, like if you're comparing it to multifamily, there's going to be a lot higher expense just because you have higher staffing costs, you have, more specific facilities, things of that nature. But, where are you at from an occupancy standpoint? What kind of expense, per unit cost are we looking at here? What are the overall return on investments for these type of facilities?
Yeah, it's a good question. It depends on the type of community. I would say the occupancy rates will shift. So for example, independent living, I think in the last quarter of 2025, it was somewhere around 89% to 90% occupancy across the board. Assisted living is a little lower than that, just because I think, again, there's a little bit more churn there because just the nature of like people are, they're a little older. They may not live as long in the community. It's like an independent living. I think that the average length of stay is like over 10 years. Oh, wow. So yeah, that's why most of these places are nearly full because they've been living there for so long. In terms of like profitability, it really depends on the operator and how they have things running. I mean, if they have different locations, they probably have their operations team dialed in pretty well where, they have a repeatable system in place. But if it's like a one standalone community, they may not have the same profit margins that a larger operator might. I would say any community that's typically above 80% is profitable. I've seen ones that are profitable below that, but it's pretty rare. There's the thing to keep in mind with senior living too is it's like 5 or 6 businesses in one. You've got the residential side, which is the living situation. You've got the commercial real estate side. You've got hospitality. You've got dining, you've got entertainment, you've got healthcare, all in the same space. So whoever's operating this has to think about all of those different moving parts and departments and how to make sure that at the end of the day, it's all about the residents and making sure that they're having the best experience possible, as well as their families too. So yeah, it can get like COVID example. I mean, you saw the profit margins of most providers went from like 30 or 40% down to like 5 to 10%. And so it took probably 2 to 3 years for them to claw back from that to really, hit the ground running again now where we're at, which is challenging just because there's such an influx of seniors about to hit the market. But we don't have the housing to accommodate all of them, which is something I think your audience is going to be really interested in learning more about.
Yeah, I mean, you've piqued my interest. 30 to 40% margins, 80% occupancy, staying for 2 to 10 years, depending on where they fall in that. Like those are some pretty big lifetime value numbers. And on top of the appreciation you're getting off the building, I guess, tell me about the inventory. If you're at 80% occupancy across the industry and your baby boomers are at the high end 80 and at the low end 65, so they're just starting to kind of come in, plus people are living longer. The average lifespan has now almost 80 years old. Tell me about where we're at inventory wise for beds in the country.
Well, the life expectancy is interested too because I'm actually studying to be a certified senior advisor right now, so I know weird facts about that, but they actually measure life expectancy twice, once when you're born and then once again once you hit, I think it's 60 or 65. So basically once you hit that, your life expectancy actually increases significantly. So if you make it to 65, your life expectancy is no longer like 76, I think it is for men. It becomes like 83 or 84 for men. So it goes up quite a bit. Yeah. So I think like demographic wise, if we think about it, the first baby boomers turn 80 this year. The last baby boomers turn 65 in 2030. Okay. So we've got a couple of years until that. Is it 2030? I think it's 2030. Yeah. All baby boomers are 65 by 2030. And then by 2034, it's the first time in America that there will be more people over the age of 65 than there are children in this country. So that's a major shift. And I think I saw something crazy. It was like right now the ratio of seniors to everyone else was like 30 to, there were 30 adults for every senior, and by like 2040 there's only going to be 12 adults for every senior. So that's a demographic shift that's definitely happening. And I mean, we're adding about 400,000 older adults over the age of 85 every year between now to the year like 2045. So we have this massive influx, which, that doesn't sound like a lot to somebody, but if you think about that, means that the population of 85 plus is going to more than double between now and 2040. Okay. So, and not all of them are going to be looking for housing too. Let's think like probably, I think on average, it's anywhere from, for 85 plus, it's anywhere from 10 to 20% of people who actually move into senior housing. So, but if you have that amount of people, obviously that's a huge increase in the number of people looking for housing. So now if we look at housing, the housing numbers are crazy. And a lot of this happened because of COVID. Like, production basically stopped. Construction stopped during COVID. Getting materials and supplies was very difficult. The supply chain was all over the map. Since then, the cost of materials has not really come down. People building has not really increased the way it should. Look at 2025, for example. At the start of 2025, there was only about 19,500 construction projects that were active in senior living, or 19,500 units. I'm sorry, not even construction projects, but units that were actively being worked on or built or slated to be completed. And in Q1 of 25, there was only about 1,500 projects that had even started. Now, given the numbers that I just told you about the number of older adults that are going to be coming into this market, we need about 100 to 125,000 units every year between now and 2040 to be able to accommodate everybody. So we're at like less than 1/3 of the housing that we actually need.
Interesting. So, like, have you seen that? Has this been noticed by people? And are they starting to try to build more, or there's like, I can just build multifamily because I don't have to have the permits, and it takes less time, and I can get, I don't know what the loan options are for, building a senior care facility, but I guess what are the trends in building? Are we just still seeing not very many being built, or are there starting to be movements towards building more of these? Because it seems like a pretty lucrative niche.
Yeah, there's multiple challenges with it. I think number one is the fact that you've got the baby boomer population that are extremely particular about what they want and don't want. And there's going to be a lot of inventory out there that they don't want because it's old and they want something new and fresh and updated. So not only do we have older inventory that needs to be updated, but then we need to get new inventory made to accommodate all the housing. So that's challenge number one. It's definitely a problem. I haven't heard anyone with a realistic solution other than, we need to repurpose. Say there's a lot of empty corporate space right now because a lot of businesses went remote and they just never went back to the office. So there's a lot of talk about revamping some commercial space into some type of senior living. The other option is kind of what you're talking about, is where people are taking residential homes and turning them into like micro communities. So they're called RALs, they're residential assisted living communities. And you'll see sometimes somebody might buy up like an entire cul-de-sac, right, of like 4 or 5 homes, and each one will house 5 to 7 residents, and each home will have like a dedicated nurse on staff, something like that. So it's more personalized. It's more one-on-one attention that they would get in, say, like a larger community. But obviously the cost is pretty significant too. It's pretty lucrative though. I mean, there's if you figure like a large community, if they're charging anywhere from $5,000 to $10,000 a month, a small micro community can probably charge starting at like They probably start at 9,000 and go up to, I've seen them go up to like 16, 17,000 per person per month. So that can be pretty lucrative.
And that costs. So let's say it's 10,000 a month. What is actually cash flowing off that? Like, because you got a lot more expenses. Is it so? If it was a multifamily, you're looking for a couple $100 a month of cash flow. For something like that, are you talking thousands of dollars or hundreds of dollars of cash flow per bed?
I mean, it depends on the operator, how well,
Sure.
if it's a well-run operation, it's in the thousands for sure. I mean, I've spoken with these two guys who had a couple of residential assisted living communities and they were just real estate guys who were like, hey, let's get in on this. And within 2 years, they had the mortgage paid off to one of the places. That's how lucrative it was. So, and they knew nothing about, I mean, they were like fresh green in terms of, the senior living space. In 2 years, they were able to turn it around that fast.
Got it. So are you seeing, because I know you started Growthly, which is focused on the boutique, so the 10 to 50 unit assisted living facilities. Are you seeing an uptrend in more and more of those? Or are there more of the ones of the little bit that are being constructed? Are they these large institutional type facilities that are bringing units online?
There's a lot of like the larger players in the market that are consolidating and buying up a lot of the smaller communities that were like, mom and pop owned, that type of thing, folding them into their portfolio. I think their mindset there is we don't have to build if we acquire, so we'll just acquire, but that doesn't really solve the how. It's just moving, changing the name on the building from this one to this one. So that doesn't really solve the problem. The mid-size communities at 10 to 50 mark, I think that's more realistic because getting one of those up and running is far quicker than say like a 300 to 600 unit, complex. Cause that's like building a college. It's like a campus. They have to have everything there. I mean, I've seen ones now that they're building hospitals on the campus. So they don't even have to leave the campus to go to the doctor or anything. So those mid-sized ones are starting to pop up just because they're quicker, faster, easier to build, less red tape. But then, yeah, you're seeing a lot more of these residential homes, depending on the area. In California alone, I think we have over 9,000 residential assisted living communities. So they're definitely growing in size.
So if somebody brought me or you an opportunity to invest in one of these things, right, and they were that sponsor was the operator, what are the things that you would have them look at about the operator, about the facility, about the business plan that you've noticed in your business that would be massive red flags for whether this is going to be successful?
That's a great question. Yeah. I think the first question I would ask, and again, it depends on this. If it's a small residential home, they're going to know a lot of these answers because they only have like 5 residents and they're probably doing 5 of the jobs themselves. They're the operator. They're probably handling, managing the home, everything like that. So they know a lot more about it. But if we're talking about like a typical senior living community, first and foremost, do they understand who moves into their community and who's the one making the decision of who gets to move in? Because a lot of times communities get it wrong. They're marketing directly to the seniors, but it's actually the adult children who are making the decisions or who are influencing the decision. So even for independent living, even for assisted living, where that older adults still, they're not in cognitive decline. They certainly can make decisions for themselves. Their children are still weighing in. So making sure that, that this community understands that first and foremost, that's who they're talking to. Probably would be like, do they have a repeatable path to stabilization? When a community is acquired or built, the first thing they want to do is lease up or, make sure that their occupancy is sound, getting to that 80-85% mark at minimum. What's their plan for doing that? And then once they get there, how do they plan to maintain that? Do they have other buildings in their portfolio that they've done that with already? I would probably want to look at like comparable assets and see if they have something else. And then in terms of like conversions, right? Like how long is it taking them from the time somebody inquires and says, I'm interested, to the time they actually move in? Believe it or not, like some of these places, it's like 180 days, which is crazy. And the only way that's possible is if they're not executing. There's something in the process, whether it's marketing, sales, or operations, that's not working the way that it should. And so it's taking far longer than it should. And obviously, nobody's going to stick around and wait for you to get your act together for 6 months. So they're just leaving a lot of money on the table when they do that.
Sounds like pretty typical business owners, more focused on the fulfillment side than the sales side. And then the sales falls off, and then you have the slacking off of new business, right?
Yeah, I mean, the biggest challenge is that the execution is the biggest challenge that I think operators have because it's such a complex business. And immediately, most operators will say, we need more leads, our leads are not converting, so we just need more of them. But it's like, that's actually the wrong approach because getting more leads in the door doesn't do anything but tie up your sales team even more when they should be spending time, on working with the people who are actually in the pipeline who are genuinely interested. There was a survey I did about 2 years ago with 30,000 sales professionals in senior living. And I asked them, like, how long do you typically take with a qualified prospect? And over 75% of them said 15 hours or more. So you can imagine, like, getting more leads in the pipeline when you're saying that I need to spend 15 hours to get this person to the finish line, that's not going to cut it. So it's not the lead game. It's really like looking at the other areas of their business. I always say that, like, senior living, it's a trust business first and foremost. And, you have to establish trust and rapport with your prospect as quickly and early in the process as possible. So taking the time, to make sure that they understand that you care, that you know their situation, that they're a good fit for the community, and here are all the reasons why. Let me show you. If they're taking the time to do that, they're more likely to convert that person, or at least move them further down that pipeline than if they're just worried about numbers all day long.
Yeah, I mean, they're, from an empathy standpoint, they're trying to find the place that they're going to live for probably the rest of their life. And they won't know they want to be comfortable, but their family also wants to know that their loved one is comfortable and they can come visit and do all the things. And, they don't have to worry about it, because I got to believe that some of it is the family member needs some level of burden taken off of them, but they don't want that burden taken off at the expense of worry, right?
Yeah. And I think because people are waiting longer to move in now, like we talked about, life expectancy has increased, longevity has increased, but the cost of senior living is not cheap, and the majority of Americans can't afford it, honestly. Assisted living, the average cost of assisted living is like $70,000 a year. And then for like skilled nursing, for a semi-private room, I think it's like $115,000 a year. And then for a private room, it's like $130,000. So most people can't afford that. And the majority of, I think it's less than 20% of senior living residents are on Medicaid. So most of it is private pay. And so that's a huge challenge right there.
So at the top end, you're talking 10 years in, 1.3 million to live there. At the bottom end, 10 years, $100,000. It's a lot of money.
There was a survey last year somebody did and said something crazy, like 45% of adults said they're going to rely on the government to take care of their retirement needs. And when I see those numbers, I'm just like, I don't know how much you think you get for Social Security, but that's not going to cover anything. Yeah, so I'm not exactly sure how that's going to work.
I don't understand that mentality either. I'm just a little bit younger than you, and I've just assumed that I'm not going to get anything meaningful for Social Security my entire life, and that it was all going to be on me. So maybe I'm just different than other people. So
No, going back to the real estate question too, in terms of like getting in on this, I think there's probably some developers out there who are unsure about the space only because this swell is only going to last for so long, right? We have all of these older adults entering the market, and then by like 2045 or 2050, that there's far less Gen Xers out there than there are baby boomers. So what do we do with all that inventory then? So we're going to build all these buildings.
Millennials than boomers, right? But you got a lag.
Boomers then? No, I think boomers aren't they the largest generation? I think so.
Okay. I don't know. I thought millennials were similar.
I'm not sure though. I have to look at that.
We'll fact check that. But either way, it's not like the need for senior living is going to go away. It's just a matter of if there's too much of it, right? And then you got the supply and demand issue where maybe for a couple decades you have really good demand and you make a lot of money, and then can you withstand having lower occupancies as the Gen Xers come in and the baby boomers die off? But I think the other thing to consider there is how far our life expectancy is going to creep up. I mean, even if Gen Xers are smaller, but baby boomers start living into their late 90s to early hundreds, that's going to increase the demand that's needed for quite a while.
Yeah. I mean, if we're looking at the whole population, I think it said something like for every 10 years, we gain like 9 months of life or something to our life expectancy just based on our advances in technology, healthcare, wellness, lifestyle, all those types of things. So yeah, who knows in 20 years what the life expectancy will look like. Yeah, it's definitely, that would be one thing I would say, if like you're in it for the long term and you're looking for like a 30-year investment of some kind, maybe this isn't the one for you. But if you're definitely looking to like get in, make your money and get out in the next 15 years, by far and away, I mean, this is the fastest growing industry out there. I mean, healthcare, anything healthcare between now and 2050 is a surefire bet, just because you've got all these seniors entering the market, but along with that, you're going to have the healthcare workers to compensate for that. You've got what is it? Between now and 2034, I think we need 9.7 million additional care workers than we have right now. So obviously there's a lot of training that has to go into that. That's a ton of demand or growth, I'm sorry, that's not even being filled right now. I mean, you could pretty much write your own ticket at that point. I just think with everybody being so afraid what AI is going to do, and here we are, we're like, whoa, here's an industry where you don't have to worry about that, and you've got 10 million jobs that are available, in the next decade. Let's focus on that. So healthcare is going to see a major boom for sure.
Yeah. Most of the investors that I deal with, I mean, they aren't looking for 30, 40-year returns. I mean, there's some people that are putting some there. They're looking at, what can I put my money in for the next decade to 2 decades, maybe a decade and a half, and then see a really nice exit, and then either 1031 it or use that money to live off of or whatever. And as a side, I looked it up while you were talking. So the boomers are approximately 70 million people. The Gen X is 65 million, Gen Z is 68, and millennials is 72.
Woo! Wow, go millennials.
Yeah. Well, it's all those boomers having babies, right?
So, okay. Well, there we go. So then it maybe the long-term investment does make sense if we're going to see that swell, kind of kick back in after the Gen Xers.
Yeah. I mean, maybe the other piece you got to think about is like what you're talking about with the existing homes, right? There's going to have to be some updating. There will probably be some regulatory changes along the way. And so it's not I'm going to build this 300 unit facility in 2030 and then sit on it until 2060, right? There'll be a lot of additional infrastructure changes that probably have to happen, but I think overall you're fairly safe. There will always be old people unless some huge natural disaster happens, and elderly people will have to have some place to live, right? The biggest question is, will there be enough of a population to afford it?
That's the question right there. I don't really know how we solve. I mean, I think at some point the government's going to need to get involved with that, because like you look at skilled nursing versus assisted living right now, and most skilled nursing communities do take Medicare or Medicaid. I'm sorry, because people essentially have to spend down their savings to get in there. But that's what Medicaid was built for. It's for people who need long-term residential care. So that's not a surprise. But assisted living is rarely covered. There's like 3 or 4 states, I think, that cover some assisted livings in terms of insurance. So that's going to have to change, because there's like, if you think about the difference between assisted living and skilled nursing, like skilled nursing is like someone who is like, they're bedridden, or they've got some type of chronic health challenge or mobility challenge or something like that, where they're literally being taken care of 24/7. Assisted living, though, most of them are able to get around on their own. They're not in some type of cognitive decline. So the fact that you have to be at this higher level of care to get any assistance in terms of from insurance or from the government, it's really going to hinder a lot of people's ability to do that as an option. And so what does that do? That means that people end up staying at home, and then you have the issue with caregivers. So there's, what was it, 60 right now? There's like 63 million caregivers in America, family caregivers. So that's like 1 in 4 adults is a family caregiver, and 80% of them don't get paid. So they're juggling their kids, their job, their home life, along with taking care of a loved one. And you're probably going to see more multi-generational homes, just because there's going to be a lack of housing.
Yeah, I mean, I know that they've started seeing more of that in California, just because of the housing prices, and the kids just move into their parents' house because the basis on the house is like $200,000, and the kids are never going to be able to afford, a single family home. But that's a whole different issue. Yeah.
You do see that in sorry. You see that in Arizona too, though. They're starting to build homes with the ADU units on
Yeah.
like already built, just for that purpose. So it's
I mean,
definitely in people's minds.
it's a common thing, at least from my understanding, in like Latin countries and in a lot of Asian countries
Yeah.
where you have grandma and grandpa living with the parents who have the kids, and that's just a normal thing. In the United States, our culture just hasn't been something that we've always like, let's move out of our parents' house and you get space and everybody can buy a home. But as housing affordability becomes harder and less and less attainable, I think you'll start seeing more and more of that, where someone bought a house in 1986 and now that everyone's just still living in there, and they just kind of keep adding people and people dying off. It's not like it's not a totally common thing, because I grew up in the house that my grandfather grew up in. So the house stayed in the family.
Yeah.
We didn't always live in it, right? Together.
Yeah. I was curious about that a while ago too, as to why it's different here in the States versus other places. And one of my podcast guests a while back was telling me about that. She basically said that I think it was like in the 60s, it's the 50s or 60s was the first time that like corporate America started transplanting people from their community into other locations. And that basically broke up like the traditional family unit where the entire family lived in this one area and stayed in this one area their entire life. Now you've got family members in New Jersey and California and New York and Michigan. So everybody's spread out to the point where like you don't have the same support structure that we used to have back in the day. And I know, my parents live in New Jersey. My sister lives in New York. I live in California. So if something were to happen, one of us is going to have to move to take care of the other one.
Yeah. I mean, my corporate job years ago moved me from Michigan to North Carolina.
There you go.
Other than me, everyone else either lives. I have one brother that lives an hour from my parents, but everybody else lives within 4 miles of where I grew up. So, so I can relate to that pretty heavily, right? So I think the other piece of that is, we touched on it a little bit, the regionality of senior living. And I'll give you an example of why I'm thinking about this. When my grandmother was in assisted living, there was a home, 3 miles from our house that she went to. Recently, we were looking at doing a trip back to Michigan, and that facility is now an Airbnb. And so, and I have to believe that there's just a lot less people in that area as they migrate away. So from your perspective, like what kind of regionality are you seeing as far as not only new construction of these facilities or where there should be, but where are seniors moving to or moving away from?
I can tell you that for a building that's already built, 90% of their residents move from within a 5-mile radius of that building. So most of them want to stay where they're at. They don't want to move to a new location. That's actually one of the biggest struggles, I think, for most older adults, is the thought of like having to let go of stuff. Not only sell my home, sell my stuff, downsize. Now I'm going to miss out on all the places I like to shop, all the things I like to do. So it's a lot for people to think about. So they try to minimize that as much as possible. So the majority of people end up moving in close. The other side of that is like an assisted living or say a memory care situation where maybe you're in North Carolina, but your family's in Michigan and something happens with a family member. You may want to move that family member to be close to you so that you can be a part of their care team, essentially. So you do see that quite a bit and it's typically in those higher acuity settings like a skilled nursing, memory care, or assisted living where the family will actually move their parent or loved one closer to them so that they can be a part of that and not have to travel as far to see them. Because that's really isolating too. I mean, if you take them out of, say, like they're living in their home and now all of a sudden they're in a community, if they're not in a community that they're from and they're familiar with their surroundings, that's going to be really, really isolating for them. So you have to think about that. I mean, yeah, I don't think there isn't a whole like migratory shift of any kind where, now we're seeing seniors all moving to one specific geographic area. I mean, there's obviously like the snowbirds who enjoy going down to like Florida or say Georgia or something like that in the colder months. I mean, we even have people here that travel from like north, like Washington State or up in Canada, and they'll come down to where we're at in the colder months just because it's warmer here. But yeah, there's not like a massive demographic shift or anything that's happening. I think it's just people tend to move in close to where they live or where their family lives.
Got it. So if I'm a developer looking to build something, I want to build assisted living, I'm going to look at where do I find a high population of 55 to 60-year-olds, and then build planning on 5 years. Or if it's going to be more of the full care, where do the 40-year-olds live? Because those are going to be the kids of the of the people moving in, right? Or is that too
Yeah.
simple?
No, I mean, I think like if you're looking at assisted living or a higher level of care, I mean, I would say like, where are the 85 plus people because they're the ones that are going to need it and be ready to move. I think that's part of the challenge too with senior living. It's like it sounds like okay, I find a place, we tour it, we like it. Now let's move in. But it's like there's a whole bunch of other stuff that has to happen before that happens. Usually someone has to sell their home. They might have to get like, a new power of attorney drawn up. There's all sorts of other things, moving parts that have to happen before they move into that community. In terms of like where I would look, I mean, I would definitely do my market research. That's typically what we do for a lot of our clients who are looking to build or acquire communities. We'll kind of do like a market assessment to see how many competitors in the area, what's the percentage of the population that's over a specific age. And like you're saying, definitely seeing that there's a strong population of like families there and people over, in their 40s to 50s, I would say would probably be ideal. That way we know like who the key decision makers are. That, yeah, it could be. And you obviously don't want to put it in the middle of nowhere. You want it to put it somewhere where there's an actual hub, because the community is not necessarily a closed unit, right? Like they're part of the outside community. So you want to make sure that there's places to take people to, and there's hospitals close by and all of those types of things. You want them to be immersed and enmeshed into the life of that community.
Yeah. You want to make sure there's infrastructure there
Yeah.
to support them and
Yep.
everything else you're doing. It's also going to help you as an operator to get them to doctor's appointments and not have staff driving half an hour each direction.
Exactly.
Right? So from an operator standpoint, what are some of the big things that you consistently see with these underperforming facilities that you're like, oh, we changed these three things and we'll go from 55% occupancy to 100% occupancy?
Yeah. So I have this like thesis in my mind that I always talk to operators about. And it's basically that like execution is the growth lever. So like how well are they executing is going to determine how profitable and how full they stay. Because it's not just about getting full, it's also about staying full. Like you were talking earlier about churn. That's probably the biggest challenge that this industry has, is people either passing away, obviously, which of course happens based on who we're talking about, or they leave. They're not happy and their family takes them out and moves them somewhere else. And every time that happens, now that entire community is in this space where they're struggling, or they're just trying to fill beds. They're not trying to like enhance the experience for the residents. They're just trying to hit those numbers and then, and hope they stay there. But in terms of execution, I think there's like five areas. I already mentioned trust as a big one. How are they building trust, and how soon are they building trust? Clarity is another one. How clear is their message? Who they serve? What they offer? What's different about them than someone else? Just, I mean, simple things like that you wouldn't believe. Like if you start looking at some of these communities, even if you look in one specific area of say North Carolina, and you look at 5 or 6 of the communities that are within a 10-mile radius of each other, pretty much all of them will say the same exact thing. There isn't a whole lot that's differentiating them. So like making sure you're super crystal clear is another execution lever. I would make sure that that's clear. Speed is another one. How fast are they with follow-ups? How fast are they, with answering questions, with setting up tours, with like moving them through every piece of the process? Because nobody wants to sit and wait, especially if it's like a memory care situation where somebody's in has a medical crisis. Like they need to get in and get themselves situated as quickly as possible. Another execution lever would be alignment. So alignment between marketing, sales, and operations. We have some clients even today where like the sales department won't talk to the marketing department, or blames the marketing department, or operations doesn't really understand how marketing works. So they're just saying, oh, this is our budget. We're not spending anything else. I don't care if we don't get any leads through the door. It's like, okay, well, that's why your occupancy is at 60%, because you're doing that. So,
right.
So alignment. And then the last one I think is fragmentation. And fragmentation is just simply the fact that like there are so many vendors in this industry, and because it's a complex business, it's got, healthcare and entertainment and dining and real estate kind of all wrapped up together. You've got multiple vendors handling each piece of that. And so as an operator, having to somehow make sense of all of that data in one place where you can look at it and say, okay, now I have the information I need to make smarter decisions that are going to benefit this community. It's very difficult to do that. So I think that's one of the biggest challenges. So if you can clear up like 3 of those, if you can improve trust, speed, and clarity, I would say like that will make a world of difference, But if you can only like work on one of those and all the rest are suffering, chances are your occupancy is probably pretty low.
Interesting. So I'm gonna shift gears here a little bit. So we've talked a lot about, this. I want you to talk to me a little bit about From Leads to Leases, your podcast, because I know you talk about this a lot on there. Just give me an idea of, what kind of conversations are you having on there? And if our, listeners here are interested in this space, what could they expect to learn from your podcast, and how are you utilizing your podcast to generate leads for your business?
Yeah, no, thanks for asking. Yeah, From Leads to Leases, we're on our 3rd season now. And the premise of the show originally was, I'm in the marketing space, I'm in the sales space. I wanted to be able to talk with other leaders in the senior living industry and just hear from them, what challenges were they having in terms of generating leads or getting them through the pipeline to the finish line, questions like that. But then it started to kind of spiral from that. I started to notice that there were deeper, bigger conversations that needed to be had, just what we were talking about, the housing situation, the staffing challenges that are present, just this major boom in the baby boomer population, all of those types of topics. So we've kind of expanded beyond just marketing and sales. And now the show is focused on kind of like the trenches, like who's in the trenches of the senior living community, the operators, the marketers, the sales teams, the nurses, and then also vendors, who's providing a service to help support those teams within a senior living community. So we have conversations with thought leaders in all those spaces, innovators. Mm-hmm. There's a whole lot of it's called age tech, new tech that's come out that's specific for senior living or for seniors. That's a really interesting space. So I have a lot of conversations with people like that. Just anything I can do to help operators get a leg up on their competition, or maybe just to think about marketing and sales differently than they did before. That's kind of the goal of the show. And then in terms of how it's produced results for us, I mean, I've had conversations with multiple, executive directors and owners and operators and presidents and CEOs, and having those conversations, it's just opened up the door of having deep conversations, building rapport with them. And then, naturally in the conversation, it always comes up and we end up talking about their lead gen or their sales process, or, the time it takes for them to close from lead to lease, things like that. And then that'll lead to a deeper discussion. Hey, maybe we should get on a call and explore this and see if we can help. So just positioning ourselves always as problem solvers.
Got it. Yeah. So if anybody wants to learn more about what you're doing or listen to Leads to Leases, where can they find you?
The easiest place would be our website. That's ccrgrowth.com, or they can reach out to me on LinkedIn. Jerry Vinci. I don't know if there's any other Jerry Vinci's out there, but you'll find me.
So before we kind of wrap up here, are there anything that we didn't touch on that you really want the audience to be left with after they listen to this? Obviously, really good conversation.
Thanks. No, I think just, from a real estate perspective, just remember that senior living investments are going to succeed or fail based on the operational execution. It's not demographics or real estate that you should be looking at. It's the operational piece of the business. So if anybody out there is interested in learning more about senior living and wants to have a conversation operationally about what to ask or what to look for and what would make a community a worthwhile investment versus another, I'd be happy to have that conversation.
Awesome. Well, I will make sure that the contact information you mentioned is in the show notes. And I really enjoyed this conversation. I took a lot away from it because, like I said, it's a space that I'm aware of but don't know a ton about. And thank you for your time today on the show.
Oh, thanks for having me. I appreciate it.
Yeah. So, and to everybody else, thanks again, and we will talk to you next week. Thanks for tuning in to Brick by Brick Wealth Building Conversations. If you enjoyed today's episode, don't forget to subscribe and leave a review. It helps more people find the show. For more tips, resources, and updates on my journey, follow me on Invest with Loren. Let's keep building wealth, one brick at a time. See you next week.